Hello and welcome everyone to today's Stocks and Crypto TA Charts live stream with me, No FOMO Charts. We're just waiting for all the live streams to stabilize the connection before we begin. I just want to say thank you for joining and watching. Cheer donations and donations are always appreciated to keep the ideas flowing and to keep the streams going. Social media links are in my profile and all content is not financial advice. We'll start off with stocks. Fairly volatile week in the stock market this week. We'll start off with DIA. If you're in my Discord group, I talked about in the beginning there is a potential double top on the daily in Dow Jones, and then I updated that market note to become a head and shoulders, which is a bearish pattern. So playing the TA this week, last week was a little bit challenging because we had multiple bull attempts, but it turned out to be a bearish pattern. What was the measured move of that pattern? Approximately 2%. And we ended up going way more than that. We went double the target, 4%. So where are we now with the Dow Jones? Okay, if we look at a weekly and turn on some of my indicators, our moving averages, we don't need the oscillators right now, but we could see our downtrend is still intact on the weekly chart. We're still downtrending in the stock market in the USA right now. What I will point out for this coming week, the next 5 business days, is there's support right at 312.38. So if bulls are able to hold this, that'll be good. But if not, a lower low is definitely possible. Where can we go? Well, using some Fibonacci, these are just rough estimates, quick rough estimates, but 306, 293, or the EMA itself 289. So we got those 3 targets to the downside for the Dow Jones. Now that's the bearish scenario. If the bullish scenario, if we happen to establish the double bottom here and bounce back up, then our resistances to the top side are 320, 328, and 332. So we're just kind of boxing ourselves in terms of the price here. So to sum up Dow Jones, on a longer term time frame for swing trading and investing is we're still in a bear market. We're in a downtrend for the past 3 to 6 months. We did happen to bounce up, rally up. We pull back down. So this is going to be the battleground between bulls and bears, between green and red this week, the traders and the investors, right here at 312. If we can manage to hold 312, we might be able to recover in a week or 2 or a month and rally up. But if it breaks down, then we're looking at these 4 targets, 3 to 4 targets to the downside below. Also note that if somebody didn't even catch this head and shoulders on the daily, on the top right here on the blue, that's okay. If we even draw our trend line, we can see that there, we might have to draw on the daily to get a tighter trend line. But there's this trend line here, but the shorter term trend line that was established somewhere right here, right? So even at the tail end of this move in the blue circle, there was that double top rejection off of that because you established the pivot point and then got rejected to the downside. Also consolidation to the side and then broke down bearish. So on the weekly for candles, there was an evening star pattern that I was warning about 1 week ago that if this is a doji candle, if this turns red, then expect downside in the market, and that's exactly what happened. So just watch out for that with big gap down. Spend a little bit more time on this because it's going to be a little battleground down here, right? It would be nice if we could bounce back up, but also it's going to probably retest this bottom side support to the downside. Okay, let's look at S&P 500 SPY. SPY is similar. We had the head and shoulders on the daily. This, if you're in my Discord, I wrote the note, right? Head and shoulders. What is that? It's a bearish pattern. So what is the downside target? 2%. We went down 4.69 to 4.72%. Already established that double target to the downside. And we're not looking at a futures chart right now, which we will later. But we hit the support level on the close of this asset, the daily close. All right, so very similar is if we zoom out, we can see that we're still in the downtrend. We're still in the downtrend. Low, high, low, high. This is our pivot point to the downside. Now it's going to be that battleground. 389.50 is the battleground. We lose that support for the next couple days, then we're going to see that lower low. Where exactly? We could use some Fibonacci. This is advanced, by the way. We could use some Fibonacci targets. We have 389.24, 379, 380, 357. Those are not random numbers. We are, again, death crossed on the daily, on the EMAs, so let's not forget that. Right, we just rejected down from the 50 EMA, lost all the shorter term EMAs, and now we're at support. Now, if we look to the left side, there are several supports on this left side where we obtained the supports from 390, 387, 381. It's all here. But if we're looking at longer term targets, we can definitely see that lower low being able to form. Right, our pivot points do confirm that. Again, very similar on the Dow Jones is we had the evening star pattern, right? Once we had this doji candle from last week, I knew watch out for this triple candle pattern, the evening star, which is bearish. Okay, but if we zoom in, which I didn't do this on Dow Jones, but we'll zoom in a little bit here and use some indicators. So what's the difference though for shorter term, medium term swing traders? Well, we are oversold here on the 4 hour. We are oversold on the 1 hour. If we switch to just a quick futures chart, okay, it's not bouncing yet, but there is a little bit of bullish momentum forming on this 1 hour chart and the 4 hour chart. If there was a little bit of a gap down, but still overnight looking like it could bounce. The 15 minutes also low. So with that in mind, it is definitely possible overnight at the time of making this video, so Sunday evening for me. It could be overnight in the EU session or tomorrow morning, 6:30 a.m. USA stock market. We could get a bounce, right? We could get a short-term relief bounce before the battleground starts again, right? So in terms of price is because it's so low with the technicals, is okay, we could get a bounce tomorrow and then we're going to see if we can establish that higher low or double bottom and then try to recover. If not, it'll bounce up and then continue the downtrend. So watch out for that in the day traders and swing trading timeframes. So hopefully that makes sense to people, right? The longer term is, well, the longer term on S&P 500 is we're still in the downtrend, right? Is we're going to test that support where 388. I have to call these numbers out again because people tend to, if I don't call it out multiple times, right? 379, 357, 389. That's support on the downside. We have a gap resistance on the top side. So 400 is our resistance to the top. 410 resistance to the top as well. So we just watch out for that. Okay, QQQ, NASDAQ. You can see I drew a parallel channel in my own trading last week. Is we had to gap up, but then we're not going higher, and then it turned to head and shoulders, right? That's why I wrote down the Discord, is there's a head and shoulders in this market right now. The bearish pattern on all three indexes. That is not something to be taken lightly. 3%. Where do we go down? We went down almost 6%. So the double the target has been completed. 286.84 is our support to the downside. And this one was a little bit more clear. You could draw right here. You could see the trend line. This is not the cleanest trend line, but we were able to draw that, right? We had the breakout here. There's an additional trend line. Once we hit that pivot point, see, it went down, it rejected, and then went further down. So it's very sensitive on this daily chart, but for people who do trend-based analysis, is right now it's retesting the support right there. Over here on this left side, there is also this support trend line. So it could be viewed in two different ways. We had the rejection. Okay, we can retest the support and then try to make a new uptrend. That's the bullish case. But if this is our resistance pivot point, then we'll retest the bottom side and then break down. Okay, watch out for that. We gotta watch out for that. On the weekly as well, there's another evening star pattern. It's just everywhere in the market. It was already here in March, happened again in May and into June, end of June, or where we are right now, end of May into June. So we could derive some additional targets. using some reverse Fibonacci as advanced. But you can see here, we get that pretty tight on the charts. We're right above our one retrace, our 1272s, 265, 265, and then 235, our pivot points. There are some additional support levels in here, which I'll just draw for the next stream. But still remember, we're in the daily death cross of the EMAs. You just have to remember that if you're a long-term investor, once I saw the death cross in March, this is a pretty serious event. Bitcoin will do at the end of the stream. So if you think about it, right, when was the last time we death crossed? 2018. 4 years ago, basically, right? This has to deal with crypto as well, right? Why am I analyzing stocks? Because it's correlated with crypto. Why did crypto crash? Why did this chart crash? They both crashed, and it was foreseeable for 1 to 2 weeks. I would say like 10 days. How many days? 1, 2. For 7 days, this is foreseeable. Okay, so this is why I do, just from experience, you run down the process, and I don't jump ahead. You know what I mean? Just run down the checklist. All right, so 4 hour, 1 hour. 4 hours still oversold. Here we might see the bounce overnight. The 1 hour as well. The bullish momentum is building on the 1 hour, the 15-minute. We did have a little bit of this bounce. Let's take a look at our Nasdaq futures. There's some bullish momentum building here on this 15-minute chart, and the 1 hour, the double bottom on the RSI. So it definitely looks like we're probably going to bounce unless there's some bad fundamental news, at least for 1 day, right? Or it could be a couple days, or just on the technicals alone. But technicals doesn't explain everything in the market. So again, very simple, right? If we just raise everything and not get too over biased to any one direction, we just draw support 1175. Just have to draw one more time. Get our 10,600. We get our 9290, but those are some extreme points down there. That's like investing, right? If we turn on some of these shorter term, is okay. On our 1 day, we could see there's an intermediate at 11219 as well. So those are the bearish targets, right? Because if it takes from point A to point B, how long did that take? It took 75 days to go negative 20%. This one as well, 50 days to go negative 20%. So if this is going to go bearish, could go bearish maybe up until August, negative 20%, if it's really bearish. But if this happens to be that double bottom, then the inverse is also true. Try to retest the 618 above 12,870. All right, so let's just take a quick peek at some stocks. We'll look at Apple. Apple, very, very similar. So I'm not going to spend too much time on it. We'll just do some of these call outs. But we did have another evening star pattern. On the weekly, it was more obvious, where you could see here just on the candle body, on the wicks. This is a rough trend line above, right? It's not impossible to figure this out, right? If we go back 1 year ago, we could see the inverse was true. The trend was pointing up off of these support levels, right? And then at a certain point, we had the inflection point, and then it crashed down on us, on the market. So we almost had an upside down head and shoulders. It's still a little bit possible to have it. There's a small chance to have it, but just the way the market is right now, there's an overwhelming bearish mentality due to inflation and interest rates. I should note that this week we have the FOMC Federal Reserve statement, the meeting. Jerome Powell is also giving a speech on Friday. The FOMC press conference is this Wednesday. It's a huge deal. It's a huge deal. If we have any basic understanding of interest rates, what's happening in the world, in the USA and EU, especially with the high interest rates right now, inflation's at the highest in 40 years. We're in a bear market in stocks and crypto. And then the Federal Reserve is having a press conference this Wednesday. All eyes are on that. That supersedes what's happening in crypto right now, to be honest. Because whatever that policy, whatever happens there, if there's any surprise news, that's going to shake the market and it's going to have a ripple effect on all assets, right? So it's extremely important this week, Wednesday and Friday. Especially Wednesday is going to have some, or actually leading up to Wednesday, you could have some additional volatility. Let's get some of these targets though. So on Apple, we're still in the downtrend. It's very obvious. We're a battleground right here at 136.56, which happens to be we just lost a major support level, but I'm going to draw the zone. Okay, I'm going to draw the zone as here. This yellow bar, it's the next support level down. It's a zone, right? So it's not about 1 penny move. It's this whole cluster. You could see it in the candle body wick here on May 20th that somebody tried to short that and then it got too oversold and people bought it. Well, let's get the support levels. These pivots for easy support 132, 125, 121, or right, we could reverse Fibonacci, it's advanced, but we just lost the 1272. We have a gap resistance on the top as well. So it's kind of sandwiched in between this two yellow boxes right now. If it pierces way down to the downside, okay, 128 as well. It's probably going to test this 132.72 as well. So I'll highlight in blue. Here, 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 here. And then we do have the next earnings in July 26, 43 days from now. Okay, we have to keep in mind, though, that with the China, Shanghai COVID lockdowns and the Beijing lockdowns, that's going to affect the supply chain of many of these companies who have manufacturer suppliers in China. And that's going to affect the stock earnings that's going to come out in July and August, right? So if you're an investor, we already have to be looking ahead, way ahead, 40, 50 days out from now, and understanding that in the past earnings that we just had, a lot of the guidance was that they're saying that supply chain is going to be the problem. So these companies are already getting ahead of that problem. They already announced it, but we're going to see the real numbers in about 40 days from now. So just prepare for that. There's basically that earnings season. It's coming again in August, end of July to August. So with that in mind, as that kind of target over here, is that's why I'm drawing all these support levels in case we go bearish for investing in swing trading. The resistance at the top, 142, 147, 151, and 154 as well. Okay, but I know we have some swing traders, right? Still oversold, but you could get a bounce, right? What am I looking at right here? Just as a general reference. All right, we just hit the 29 RSI. Okay, well, when's the last time we hit 29? Last time we hit 29 over here. It does seem that there's a slightly higher chance that we could bounce up unless the fundamental news is bad this week. Hourly, this is great. 1 hour upside down potential head and shoulders with bullish momentum on the RSI and the MACD. Apple looking like it wants to bounce up, a little bit of pressure. Where could it go to? Immediately to 140, maybe 143, pierce that to the upside. The downside risk would be something, if it just goes 4%, the downside risk is 2% on a small to medium sized capital. Just because of that oversold, that technical, right? I'm interested. This might not be the all-in spot, but if somebody's like a day trader, swing trader, is definitely already looking at this. It already seemed to bounce a little bit in that post-market. Okay, let's take a look at Amazon. We'll take a look at Tesla, and then we'll just move on. What time is it? Okay. Get Amazon. A lot of these tech stocks are going to look similar, but there's slight nuances to it. It's not exactly 100% the same. Start off with the weekly on Amazon. So Amazon, first thing I saw in this weekly is when Jeff Bezos stepped down from CEO position, and Amazon was consolidating for a whole year straight, that's not good. That's not good. Right? No investor wants to see the stagnation of the stock price. Nobody wants to see that. Right? We had our lower low, lower high, boom, lower low to the downside. Now, on this weekly, that's why this is interesting. There was no evening star pattern, no triple candle pattern like there was on March. Very interesting on Amazon. But still, you know, if you follow my stream closely, and I do tell what in my Discord what I traded and I closed. I went long somewhere here in this area, and I sold here just because it's swing trading, right? I caught that one leg up, and then when I on the charts when I saw and in the market I felt the resistance zone, right? I'm out. I'm out. I sold it, right? That's swing trading. Go from here to here, or you know, from here to here, or wherever your targets are, and whether you're bullish or bearish, and then you know, just hit the target and sell some or sell all, right? But this was the clue on the daily, is there's a shooting star. If you know your Japanese candles, if you study the candle patterns, that's not good. So there was a daily evening star. There's a shooting star here right at resistance. You get out of there, right? As a trader, get out of there. Or take some profit, or set the stop loss. Like, it's very obvious. Like, if I wasn't going to sell all, I'd set the stop loss right there at 120.19, and then I'm out, and the market would have confirmed and kicked me out, stopped me out into profit, not stop me out into loss, stop me out into profit. All right, so okay, Amazon.com. We'll get this resistance up here, 113.20, right? Where's the support to the downside? Support 103.84 down here at the white line, 103.84. Where's the next level of support? Keep finding it. Keep finding it. $100.90, probably 100 itself, right? That's a nice psychological. Amazon had a stock split. This used to be $2,250 like 4 weeks ago. They had a 20-to-1 stock split, right? And now it's $109 Amazon. So once the market bottoms out, Amazon is going to be probably an easy buy, right? Because they stock split, it's so cheap. It's 20 times cheap, 25 times cheaper mentally, right? It's basically the same company. So once this market crash is over, whenever it's over, I mean, Amazon's an easy buy, right? Everyone uses Amazon USA. All right, so support 95, support 90, support 85, support 80. I mean, there's so many down here. I'm just drawing it for the future reference. So again, if it's low, high, low, we hit that lower high, boom, it's going to retest here where 104.50. Our resistance to the top side, 115, 120, 135. Watch out for that. So if you want two easy levels, the blue here, 128.9, and we're stuck to 129 and 104 as an investor, right? It could consolidate. So the three scenarios that could happen in this market right now is we could consolidate first, just stay stuck in here, right? That's a scenario. We could break bearish, scenario 2, or we could bounce bullish, scenario 3. So that's what swing traders and investors, that's what we're watching for. Simple. We're in a daily death cross though, so it's still a bearish downtrend, okay? Bearish downtrend. 4 hours, take a glance at that, oversold. 1 hour, oversold with the momentum. Again, Amazon looking like it wants to bounce. But again, it's because these are the two biggest tech stocks in the entire USA stock market. Let's take a look at Tesla before we move on. Take a look at Tesla. So Tesla filed for, in the SEC report, they filed for a 3-to-1 stock split that might happen sometime either this year or next year, right? They have their shareholder conference, I believe, in August. And lo and behold, their earnings is reporting on July 25th. Okay, so Tesla, yes, Elon Musk does like to release a lot of news for his company and for his Twitter account as well. So it's just something to keep in mind is first thing off the bat, we're still in the downtrend on Tesla, but the only saving grace on the TA charts is for bulls is there might be a potential upside down head and shoulders, which would be good. If this is true, this is a maybe though, right? If this is true, the bullish case, an extreme bull case, would be 23%, back up to $934. That's the bullish target. But if we do draw the trend line here, we could see we rejected down perfectly from this topside resistance trend line. And that's how, putting together the pieces of the puzzles, right? If S&P 500 and QQQ is going to reject down, most likely every tech stock is going to go down. Tesla is going to go down, and we just see it. You look at the watch list, it's all red, right, for 2 days, business days. So that was foreseeable. It tested it 2 times here at 789 and 757. It's still in the intermediate downtrend, right? We do have the support right here at 680 that people are fighting. The traders are fighting for. 623 is the downside target as well. Let's get some of these numbers up. We also have 600 itself for additional targets. It's advanced, but we can use this Fibonacci extension and see way down here, there's a $500 target way down there. There's all these targets in between like 550 and such. So it really depends on just how bearish the market is going to go down. It's not determined by one trader. It's the collective market itself. Still in the downward sloping wedge. So if it's going to retest at an extreme bearish case, it goes straight down to 600. Right, I mean like downtrending straight down to 600 and then maybe bounce down here, because this is a very strong support yellow trend line, this one right here. We can see it works when it touches, but where's the next down touch? Way down here at 580. So I'm keeping that in the back of my mind. If it gets to 580, I'm interested in that as an investor. All right, so resistance straight above 715, 738, 755, 775. We can turn that off now and zoom in a little bit to see. Interesting, right? If you look at QQQ, this is why I do my process, and then I can compare. This is how I get a really good comparison. 4 hour on Tesla is not oversold. The 4 hour is not oversold. There is bullish momentum, but on the 1 hour, it did hit oversold into the end of Friday and then bounced up. So Tesla already made its a little bit of its bounce faster than the rest of the market. Okay, so that's a difference, right? See this hourly? This is so high. This is relatively much higher. Apple was way down here, remember? On the 15-minute, remember on the 1 hour? And we just saw it 15 minutes ago. Here, this is not the same. Right, so Tesla already had his bounce, and that's because of the stock split news. Right, so not every stock is exactly the same. We had the 1 hour upside down head and shoulders. This is where we get into a little bit more detective work. 1 hour upside down head and shoulders. Wonderful. Okay, the 2% target is where? To the top side. It's at 719. So this is our bullish target for the next couple of days if we're going to get there. Now, 4% up. The double the target would be 730, close enough to this original target to the upside here. Let's see if that happens, if it happens or not. 700 is our support on Tesla. And then 688 is the support as well. And we'll just let the technicals play out. Watch out for any fundamental breaking news as well. Okay, I'll do one more stock. Let's do... Thank you for joining the Discord. Really appreciate it. Thank you for watching, everybody. I am streaming live on TradingView, YouTube, and Twitch. And we have a Discord group. And donations are appreciated. Follows are appreciated. To keep the ideas flowing in the stream. All right. So this week, again, the FOMC, Federal Reserve of USA, basically, is huge press conference and statement. Projections and the interest rate on Wednesday, followed up with the speech on Friday. CNBC, Bloomberg, that's all they're going to cover, basically, probably, on Wednesday and Friday. But we do happen to have at least one stock earnings. So I think I'm going to let's do Oracle, because that's happening tomorrow. Try to do Oracle and Adobe really fast. So Oracle is still in the downtrend, all right? Now, and it's full retracement all the way back down to support. Support right here, $67. Where's the additional supports? 65.81, 62.71, 63.87. Still in the downtrend. All right, it's a tech stock. So resistance to the upside, 69.11, 71.28, 73.24, 75. Now getting these in my mind on the charts is critical because now it's not so random anymore. Getting ahead of this. We're finding patterns, we're finding trends, we're finding levels. Okay, so we know tech stocks, when it crashes on earnings, it goes usually like plus or minus just visual, like 10%, right? This one went down. Yeah, so it's plus or minus 10% the past couple times. Takes about like 30 days approximately, right? Just on average, just a quick rough estimate. So if it goes negative 10% down, then $60 is the target downside for Oracle. If it's 10% to the upside, that's the top of this resistance point we just pivoted down from, and that's $74. And then anywhere in the small support and resistance in between. But you know, it would be interesting, like for example, in a bearish play, it could go smash down below here and then bounce up to retest. In a bullish play, it could bounce up, back down to retest, and then try to rally up. So those are the two, or it could just stay in here, which would be kind of strange, but it has happened before. It bounce up and then just get stuck in here. Watch out for that Oracle. Okay, Adobe, every content creator's best friend. Adobe, the company makes Photoshop and Premiere and Lightroom, etc., etc. It's a tech stock though, company in the NASDAQ. It's inside of the NASDAQ, right? They're reporting their earnings on when? June 16th. So just watch out for that. Daily, it's in the downtrend. But again, there is a little bit of this support. I am seeing it visually whenever it gets down to 394 to 377 area. Likes to potentially have that support down there. If we connect all of our trend lines, this one's right here, right? So it's back testing that trend line. And then we also have the wedge. So a lot of stocks, when it starts looking the exact same pattern, hold on, what's going on here? Exact same pattern, right? It wants to test two places. So in a bullish scenario, Adobe wants to do this, pivot right here above the trend line support, and then try to bounce, at least retest or bounce up for a higher high. That's the bullish case. If it breaks down, it's going to do this. But on earnings, it's like plus or minus 10%. Same thing here, same thing. Okay, just do some visuals, right? For the past like year. All right, so plus or minus 10%. Let's get those two targets up. 352, 333 on the downside. If it bounces up 10%, 432 or 450. But remember that we're in the downtrend of the stock market right now. So it's just one company. This is not Apple or Amazon. So Adobe is just kind of probably going to just bounce around by itself. Same thing with Oracle, because it's just two companies. It's not 50 companies like earnings season. So that's going to happen in July, August. Over here. So watch out for these two targets on Adobe. All right, let's switch things up. It's about halfway. Let's just go right into crypto because I know a lot of people, they're here for crypto. So let's just move on to that. All right, so the first thing people need to know about crypto is, let's just take a step back in everything, is that 9 months ago, there were analysts and traders who were calling this as the top of the market. Okay, so I'm just going to point that out right now, is that way back here in April 2000 or May 2021, that was a relative top in the blue circle. Over here, when we hit, this is where I'm looking at total market cap, so it's in trillions of dollars index. But this is when Bitcoin hit that 68,000, 69,000. That was where we called the top of the market. And then this right shoulder, the break of this head and shoulders pattern was bad. That's bad. Okay. We have to understand the correlations with the market. I know this is an extremely ugly chart, so I'll just turn everything off. We're looking at 1 to 2 years of total crypto market cap. Is we can see the correlation on this, just on this white price. This is the stock market crashing as well, right? Low, high, low. We just looked at it for 30 minutes straight. So this confirms the correlation with crypto to tech stocks. And if you're wondering, like, why do we just crash for 5 days? Because if we zoom in, we can see these two lines, which I talked about last time on, or for 2 weeks, it was plus or minus 6%, or even more, 9%, right? So 9% breakout was about 1.4 trillion. The breakdown was also 1.04 trillion, or a little bit more than that. We lost 1 trillion. That's it's not random. Once we lost the break, I might have to erase some of this. I did draw these white lines here, right here, just saying. The 1 trillion, we hit that target. So doing technical analysis definitely helps to center my mind around the targets, right? It's not random. I might erase some of these. We were in the 618, right? If you look right here in this indicator, and on the support level, we were in the 618, and then we did not break bull. This is a bear break to the downside with follow through, continuation. Just red, sell, sell, sell. That's algorithms, that's traders selling, that's people getting stopped out, that's future traders, all playing this to the downside, right? Correlated with the stock market, and then also USA, I think she's a Secretary of the Treasury, Janet Yellen, did make some remarks and said some comments about crypto, and that also fueled the downside for crypto over the weekend. Remember, crypto is 24/7. Sometimes the big moves happen on Saturdays, sometimes, but it's not over for crypto. Okay, did Bitcoin go to zero? No. All right, we'll talk about Bitcoin in a second, but on this weekly, we do have to note that we lost 200 EMA. That's kind of our last line of defense for bulls. We lost that 200 EMA. Now it's almost in a free fall. There's this invisible hidden support right here, 944 billion right here, which I'll mark for next time. We also have the 786 Fibonacci down here at 742 billion. But as a bull in the crypto market, what I learned is when we crash in the market, I do nothing. That's the key. As a crypto investor, when we crash and when we're downtrending, when we hit all-time highs, when I see a giant head and shoulders on the crypto market cap, when we're at the highest levels of all time of a lot of these cryptos, when Luna's crashing negative 80%, when everything's crashing in the market, I do nothing. That's the secret. And then just wait for the crash to be over, right? As an investor, like a hodler. But in terms of buying, like I'm talking about buying. So if someone's losing money, that's a different story. I'm saying, where am I going to buy here as a long? Like, where am I going to buy? Because if I kept trying 50 times here, it's just massive losses, right? So that's what I'm saying. As a bull investor, I'm waiting for it, right? Swing trading is a different story. So let's talk about that right now. Swing trading, we are in the oversold here on the 4 hours. On the 1 hour, it is also oversold. On the 15-minute, it is oversold. And on the 5 minutes, oversold. That's four time frames were oversold. The daily is also oversold with bullish momentum. The weekly is also oversold. So what am I expecting? I'm expecting a bullish rally at some point for crypto, okay? It just depends on where is the pivot point going to be. Where is this price going to flip around? And then a lot of bulls are going to get really excited. So where's the target? It could go straight back up to 1.14 trillion. It just needs to pivot. What does that look like? It looks like maybe one more red candle, one doji candle, and then it's the morning star pattern. This, and then straight up, bounce, right? because we hit our low. This is our lower high. Where's our lower low? Wherever that's going to be. And then when lower high bounce. We could retest the 618 level just below here. All right, so that's our target. With that being said, let's just go straight into Bitcoin. Okay, now we're looking at Bitcoin on Coinbase. Before I even do anything with the indicators, let's look at our Fibonacci levels. We're looking at 2 years of price data. Fibonacci pandemic low to pandemic high. We just lost the 618 support level, and we are down trending. This is kind of a weak. I was expecting the lower high to happen here. That's why I was saying potential bullish rally in my Discord. Didn't happen, right? We had this. The stock market called the head and shoulders. That happened. And then it turned into a double top, right? So that's why I always want to be flexible. I didn't buy or I didn't push any ideas for crypto during this time. I did that on purpose, right? Is just want to be careful because we're in the downtrend. We start drawing some trend lines. Rejected. Almost like this looks like Amazon chart, right? If you just if I cover the name of the chart, I would have thought this is like Amazon. Almost the same. All right, but Bitcoin hitting the lower low, lower high. We're seeking our weekly lower low right now, and it's getting to the low oversold region. This is good news as a technical analyst. Why? Because the last time we got this low on the RSI of 30, that was the at least in 2019, because Bitcoin was $3,000, is that it rallied from that point, right? Because if you think about it, if we just look at RSI as an indicator oscillator, is we did lose we had bearish momentum at these two spots, double top. But in terms of Bitcoin crashing to all-time lows, we did hit this RSI, but where is the target of this double top M? It was supposed to be almost negative 80% off, right? So at a worst case, Bitcoin could crash down to $6,000 or $5,000. I would love to buy it there, right? Because it's 10 times cheaper than 60,000. I would love to buy $6,000 Bitcoin, because imagine all altcoins being that cheap, right? So that's just my super bearish target. If that happens, 6,000 to 4,000, would love to go long and buy here, because then you have a much higher chance of it going up, right? But it could take a long time. Last time that happened, it took 2 years. That's why if you've been in the crypto market long enough, you know when it's bear market, it's bear market, and then just don't do anything in terms of buying assets, right? If it's just crashing, there's no reason for me to do that as an investor. But when it starts turning around and going up, then I'm going to long that, right? I did it here in the beginning of the pandemic. It crashed down, it bounced up, and then we identified this pattern, the breakout. That's why it went so high, and we longed that. Then we identified the double top here. Okay, it's going to go down. I'm not touching it. It just lost the support level right now. That's why, if you have experience in crypto, extreme patience is the key for investing as a bull, like a green trader. All right. Now on the daily though, this is a slightly different story. Once we start talking about swing trading and such, okay, we're getting into this bullish setup, right? There's momentum building here on the daily. Okay, 4 hours. It's still a downtrend. It's still downtrending. But we're getting into the zone, the low zone of the swing trading, just the bounce, right? I'm looking at here, comparing here to here. It's just entering that zone, just like over aftermarket, make it very clear. It's kind of like this purple line and this purple line. You see what I mean? Is that you're starting to see that big capitulation sell off. There will be a little bounce on the day trading, like 5 minute 15. But then be prepared for this exact carbon copy of this price action. It could happen again. It looks like it's happening again, right? You have a sell off, you have a little baby bounce, and then the capitulation sell off, and then it gets extreme, and then you get, that's the bottom of that particular move, right? Why does that happen? Algorithms, futures, shorts, and people getting stopped out. So that's one potential scenario that if you're a Bitcoin trader, keep an eye out for that as one potential scenario. Now, on the hourly, it is oversold. 15, it's oversold. 5 minutes, oversold. Daily's oversold as well. So again, Bitcoin eventually going to bounce, but it needs to find its low. Just like total market cap. We lost this candle wick here. We lost it. Okay. So now the market's saying, well, how low can we go? Basically, before shorts, there's too many people shorting. There's nobody left to sell. The demand supply balance will flip itself for that one bounce eventually. What can override these charts is if we have extreme fundamental news that's going to just, break down like that. It has to be extremely bad news, right? That's going to override the charts. But is right now the exact perfect spot to buy? It might not be as a swing trader, because for me, I want to see a level of support being established. This is a falling knife. It's what's called a falling knife in the stock market and crypto market. When you just get pure red, I don't want to buy that. I want to buy this when it goes sideways. Like this over here, circle. This is what people do, and swing traders do. They wait for the level of support and then they buy, right? This is just straight down for a bull. So probably just like pro tip is you just want to wait for this thing to at least make some kind of, from experience for cryptos, a support level or upside down head and shoulders or just uptrend, one of those type of thing. If it's just pure red, I'm not touching that. No way. Shorts are having the greatest time of their life in that right now. Shorting from here, the breakdown 27,000 all the way down to 25. And please keep in mind that for 6 months or 9 months, I have been saying Bitcoin was going to go probably down to $25,000 as a potential target, right? So if we zoom out, just for people who are just like maybe seeing me for the first time, is when for like 9 months, 6 months, this was always here, these targets from Fibonacci, right? 45, market, 45,000, 37,000, 30,000, 25,000, psychological 20,000, 18, 15, 12, and 10, right? It's all there. How did I know that? Is if you zoom way out into a weekly chart, we might have to go to BLX. This one works too. On my Bitstamp, I just switched the chart. If we're on a weekly chart on a logarithmic scale, right? You turn a log scale on as a pro tip, is you can draw this line like that. That's one way you could draw it. From this low price of $2 Bitcoin 10 years ago, 11 years ago, you can draw, we could have drawn this. This was here the entire time. For 4 years straight. This one line is here. Lock that in, right? How many times we fell below it? We rejected at 12,000, 50% 618 retrace, rallied up to 60,000, but it got stuck here, right? You could also draw this. There's a trend line here as well on Bitcoin, and then there's another trend line here as well. So I know a lot of people are saying, okay, the super bullish target is, yes, $100,000 Bitcoin up here. It existed, but we hit the resistance first on the way down, right? So now if we use this long-term analysis for hodlers and investors, where is that obvious down the bottom of the trend line? And there's also horizontal support in the zone. It's in the 16,000 to 10,000 zone right here on the arrow. So that's why, as for me as an investor, I know once we start downtrending in crypto, yes, there's these little bounces and whatnot, but I'm looking at big picture here as an investor in crypto. Also, the sentiment is not that great. Inflation is so high. I was just thinking about it. This is like side note. I'm thinking about it. I mean, if people have to choose between buying food, gas, pay their bills, utilities, and rent versus investing in crypto, not everyone is going to invest in crypto. They need to survive first. Like what do people need in life? They need food more than crypto. So it's not the same, right? 2020, we had stimulus checks, we had lockdowns, people had some disposable income, we got stimulus checks, and then boom, the market, people had money to buy. Also, the stock market was going crazy up. So now that the stock market is coming down, is just mentally have this in the back of my mind as well, is that we could crash down to $15,000 or $10,000 Bitcoin, and that could be our low before we start this again 1 or 2 years from now, right? That's the long-term view, okay? The investor holder view. Swing trading, we just kind of went over it, is that we're looking for the bounce, but you want to wait for a support level or strong momentum on this intraday as well. It started is what I'm saying. Even on 15-minute, you could see as I'm talking, the intraday 5-minute, 2-minute, 5-minute bulls are buying this thing, the algos. So 24 hours from now, we could retest 26 all the way up here. It's possible, right? Bullish scenario, you go up. Consolidation, you go sideways. Bearish, you go down. Just prepare yourself for it. Set alerts and whatnot. All right. So that was a lot of education and experience knowledge. Let's just move on. Let's go to Ethereum. Right, this educational setup didn't work, and you got that particular. If somebody bought it right here, that's a risk, right? Let me put that back up. That was the risk. 30%. It was like something like 7% to downside. But this is why we need a stop loss, because when this happens in the crypto market, you go negative 20%. Can't let that bleed out like that in terms of money losses, right? Just controlled loss, one small trade, no problem. Wait for it. Where would I go as a swing trader? Where am I going to go long again as a swing trader? When I see the bounce, when I see the reversal, when I see the support level, when I see a pattern, any of those down here, right? But that's why protecting principal and profits is the key. So on Ethereum, let me erase this, is we lost our 200 EMA. That was the kind of the red flag of, wait a second, we're split. Usually bounces here, did not. Okay, so this time's different. Lower low. All right, how low is it going to go? The bullish momentum is building on Ethereum is good. So the bullish momentum is also building on the the daily. But our 4 hours oversold. It's oversold setups everywhere. Now it's just a matter of where's the reversal going to happen? Where and when? Meaning what price? So if we're going to bounce straight off 1300 down here, we need to make sure Ethereum is not going to go below 1300. Meaning it needs to bounce like that to 1400. Nice. That would be nice, right? If it's going to hit 1250, I'm just putting out $50 increments, $50 to $100 increments. Does that make sense on the charts? Let me see. It does make sense, because this zone, why would it bounce here? It's the previous all-time high, March 2018. So this actually makes a lot of sense. It's in the zone. It's in the zone to bounce. It would be nice if we get the bounce for swing traders, right? It'll confirm our low high. If this is our lower low, bounce straight up to our lower high, probably 1900 or right here. I'm looking left, so I'm looking right here. Deriving out from here. Now, in this particular educational example trade, it would be like a 30% to the upside, probably to do 10% to downside. And if it works, that's trading, right? It's not a perfect setup because it's just it is the falling knife setup, but I'm saying for educational purposes. If it doesn't keep going below 1300, that's very good. That would be very good signal, right? Again, one of these three signals is probably going to happen. So I'm very closely watching all crypto prices right now. BNB, Binance Coin, is still in the daily downtrend. Weekly, but here's the thing with Binance Coin, the weekly 200 EMA is way down here, 187.60. Does that correspond with the Fibonacci level? Let me see. On 2020, does it? Not so much, but it is there. All right, so that's one major level of support right here at 190, 150 for Binance Coin. It is still low, high, lower, low area, so it could bounce up for a couple of days and then crash back down. All right, so you just want to watch out for that. Depends on what time frame somebody's looking at. We have the resistance on the top side. So to me, what is this downward channel? It reminds me of tech stocks. Right, we just lost that. This is an interesting X marks the spot area. Why? It was the 618 and a trend line support, and we lost both of them. So that's how I know, coupled with low RSI, I mean, there's something, it's very oversold right now. This is an interesting setup. Some people might just buy now, right? But it depends on the strategy. But for example, right, on Binance Coin, the smaller target for this 3% might be really small, but just for example purposes, small amount of capital, right? The last time it happened, last time it bounced, it did go about 6%. So we do have this doji candle here on the hourly. Next 24 hours, if this thing's going to bounce, probably going to bounce very soon on Binance Coin. Look at Solana. So here again, trying to catch the bottom is you're going to have to try a couple times, right? It's either try a couple times or just wait as a trader. And Solana was different because they had that outage on the system. So I personally didn't even touch Solana. But again, low RSI, daily 4 hour, 1 hour, 15 minute, 5 minutes, all 5 minutes starting to bounce. So these day traders and moving into the EU session, it's looking like it wants to bounce. So 6% to the upside, 3% to the downside, stop loss right below this candle. And if it doesn't keep going down, it's going to be a successful trade. Can't be wrong too many times though. So the upside target, probably around $30. And the trying to form a hammer candle on the hourly, it's going to take about 33 minutes. But hopefully that holds down here above the $27 range. Okay. Cardano. So if you remember on my stream 1 or 2 streams ago, I was saying how do you have no FOMO is you don't do anything, right? Even though Cardano went up 40% and it was so green on the charts, I knew do not touch that from experience. Why? Because it's just, if I zoom out, are we in a downtrend or an uptrend? We're in a downtrend right now. So usually the large bounces on Cardano has failed. So this particular bounce failed. The daily, it tried to succeed and then it failed because the stock market pulled back. That's why I understood that correlation. Another way to look at it is if something goes up too high, you just don't touch it at all, or you put a small amount of capital as stop loss. It's definitely possible. All right, but it wanted to be an ascending triangle pattern, almost was. It had to bounce and break out the third time. It did not do that. It crashed down just like stock market. Where to 44 cents, which I did call out was a target, 45 and 40 cents about a month ago. So this particular snapshot is what we want to see. Is you're not just buying a falling. I don't want to buy a falling knife pattern. It's pointless, right? I want to see this. I want to see the turnaround. I want to see the flippening. I want to see this happening. Not flippening, but it's a support level being established and you have a breakout play, right? It's not just the one red candle. You could do that, but that's more day trading style, right? On if it's going to do a V-shaped recovery, sometimes that happens. But even if you keep zooming in, you'll find it, right? On the 5 minute, it is going sideways, right? So it depends on your perspective. What kind of trader are you? What are you looking for? A 1 hour, interesting double bottom on this RSI with the hammer candle in the works in 30 minutes. Very interesting that we might get a bounce. 1 hour, 4 hour. So if pretend this is the low at 45 cents, 45.55 is, let's say, if it's going to go at least 6%, then the stop loss 3%. Or if you're targeting higher than that on a swing trade, like a 12%, then 6% to the downside, small, medium amount of capital, and just let it run. I mean, if it goes up again, fantastic. If it gets stopped out, it's no worries, no problem. Small amount of capital, medium amount of capital. The problem becomes if somebody goes all in on every trade, if somebody's wrong 10 or 20 times in a row, they're bankrupt and Can't trade anymore, right? So it's all about risk management. So let's talk about that for a second because I know it's crypto. So in again, this is not financial advice. This is just my own personal educational experience. Is without risk management, right? Without the 2-to-1 risk reward to risk target, and I've talked about this many times on stream. Is it's not about trading is not an all in and all out. So it's not an all in buy, all out buy. For swing trading and day trading, is that's not what it's about. It's about using only a percentage of capital. You only risk if you're in the beginning, only risk 1% of your capital per trade. So I've said this before, I'll just do it again, right? Is because we're getting into that low zone where it might be able to buy or like the stock market, crypto market might bounce, right? You have risk management. If your total account size equals $10,000 USD, right? What is 1% risk equals what? Right? So you don't have to, people could do it easily mentally, but on the stream, let's do it. It's 10,000 US dollars times one, nope, times 1% is what? $100, right? Meaning this is the maximum loss per trade. Does that make sense? That for a lot of people is very difficult to do. So here in this example, if 6% is my stop loss, I would be risk. This is, way a lot more risk, but the more advanced and professional or experienced somebody is, 6% risk would be $600 or 10% would be $1,000, right? But still, the more risk you put in, and if it's not at the right spot in the market, it's just a loss, right? The problem is a lot of people in trading do 50% risk or 100% risk, and then after one or two trades, they're bankrupt and they're done, liquidated, right? So this is how you survive in the market. So then, what is the profit target? Well, if the profit target, right, you're trying to get 2-to-1 reward to risk ratio. So in this particular case, if it's 1% risk maximum, then 2% profit target would be the minimum profit target I'm trying to obtain, which is 200 USD. It's the minimum profit target, right? These are really small numbers, by the way, but the concept remains the same. You always want to get probably a 2-to-1 reward to risk ratio, and then it all depends on how good a trader's chart skills and money management is, right? Because on crypto exchanges, you could only put one type of order, a stop loss, and then if it goes up, you have to either put a limit sell or move the stop loss order up, like this one I'm saying. So like, let's say if this is the trade, right? And then I found this setup. It's okay, this is a pretty good low. This is a much lower risk than it was like 2 weeks ago, right? Okay, so I found this trade. Now it's 2-to-1 reward to risk. That I'm risking 3%. Let's pretend this is the actual trade. Let's just pretend, right? So if I have 10,000 maximum dollar USD in paper money, example, right? 3%, negative 3% risk is what? $300 negative max loss per trade. Okay, then if my profit target is 6%, what is that? $600 profit is what I'm trying to obtain. So once I put on the trade, let's just pretend I bought at this exact second at 47.06, 47 cents, right? I set my stop loss 3%. I put my alert at 49.75 like this, Alt A, right? Where's that? 49.70, right? So 49.70. 6% profit target reached. Sell some or all profit now. Sell some or all, right? That's your discretion, but you should sell some because it's the profit, or sell all if you want to be really disciplined. And then you also have the stop loss down here, that exactly, where is it? 45.29 or 45.32, right? 45.32, card ADA. Stop loss, negative 3%. Sell all and sell all now, right? It should have been automatic if you have a stop loss in your crypto exchange, right? And then anything that happens in between, as a swing trader, doesn't matter to me that much. It does matter from an analyst perspective, but from a trade, if it's binary, we're going to either 49.70 or I'm going to 45.31, right? Anything that happens in between is less important now if I identified it at a good spot, right? It is important still to watch it. Like if it's going uptrend, okay, great. Then it's easy trade. That's easy money for trading, right? If you buy it at like always a bottom spot for this one swing trade, easy, 6%. If it gets stopped out, no problem, no problem, because we manage the risk. I didn't put all my money into one trade and then keep letting it bleed out negative 25%. No, no, no. That's not trading. That's gambling. That's having no risk management at all, right? This is what I like about swing trading and investing. You have some time to calculate what is it that I'm doing as a trader in the market. Nobody likes to hear this part, the risk management, like, oh, wait, it's only $600. No, no, no. This is what professionals do more of than I would say like an amateur person. Amateurs person just throws in all their money and then never looks at anything anymore, right? Or just follows other people. A professional would say, what's my downside risk first? An advanced trader with experience. What's my maximum risk that I'm willing to risk and lose in the market before I step into this trade for crypto or stocks or whatever, Forex, whatever you're doing, options, whatever you're doing, stock trading, crypto trading. The risk management is the other half of the equation. The first half of the equation is being a technical analyst, doing charts, figuring out like what's going on here. So we did that half. The second half as a trader is now it's the money management, the risk management part of what am I going to do now? Because I can do nothing, meaning don't buy or sell, pass. I could buy. If I buy, then I have to execute this risk management. And the opposite's true too. If you're a short, if you're a bear, like the exact opposite inverse is 100% true as well. Right? You negative 3% stop loss if you're trying to short something. But still, shorting is a lot worse because you could have, double or triple or quadruple the losses. So I would not recommend that. But this is what I recommend, right? This will save a lot of people. And it's not just me saying this. If you look up stock trading risk management or crypto trading risk management, it's all over the internet. It's public information. It's just nobody, it's up to the trader to enforce it on himself or herself, right? It's the trader's skill. Without this, risk management, reward to risk ratio, somebody's probably eventually going to lose all their money. So just beware of that. Beware of that. Okay. And the profit target and this risk thing, I've said this like, I don't know how many times I've said it on stream, but this is like a day trading or a swing trading risk management percent. Day trading could just be like a 1% risk for the 2% target, right? Because a lot of day traders use a lot of capital, like a lot of money in per trade. So this, they're only trying to get 1.5 or 2% profit, right? A swing trader might try to get 10 or 20%, right? But then the risk, a lot of swing traders, you see them with like stop loss in negative 5% or like negative 10%. That's not impossible, right? It's just on the charts that would look like this. If it's 20% profit, that's way up here, and then 10% stop loss is way down here. You just set the numbers differently, and the use of capital is different, right? Because you're still talking about dollar risk. A hodler investor might even do like insane 50% target. Not insane, but for crypto, it's not insane. It's just that would look much, much bigger, right? 50% is way up here. 20% is way down here. 25% way down here at 35 cents. And then if you zoom way out on an investing time frame, like a daily or weekly, that's actually not impossible. But it's slightly less likely, right? Because that was better 2 years ago when we had the ascending triangle breakout. When we had this breakout, that was more plausible. Trying to catch the bottom of any market is actually challenging, right? So it might take a few tries. But for me, what I learned is I just don't do anything until I want very high percentage probability situations that's going to go up. Like for example, right here, May 27. This one was that's similar, but this one was a lot better. This particular setup, 28, May 28. So again, this is kind of a risky setup, but I'm giving it educational examples. Okay, I went way overboard today on the examples, but I think it's probably good to end here on this risk to reward with given that all cryptocurrencies are basically oversold as well. Thank you so much, Z Angus, for the 100 coins. This one of I believe is a mod from TradingView. Thank you so much for donating 100 coins and watching and chatting, supporting. I really appreciate it. Thank you so much. I definitely enjoy streaming as well. Thank you so much, Z Angus. I really appreciate it. So where we end with this is everything I'm saying right now and everything I'm sharing, it's all possible because of TradingView, to be honest, right? Because I know a lot of people come in here and they're like, want to jump in and just go full speed. But the problem is jumping in at just any random part of the market, that's where the risk is, right? Like if it's almost like you're trying to play that dart game where you just throw darts at the wall and you're trying to hit the bullseye, is there's a very low chance of that actually happening. So there's a lot of tools here on the left side for TradingView that TradingView has. If you have a free account, you could just play around with these, right? Just like test it out. What is a trend line? What's a horizontal line? What's a channel? I mean, the most important tool in my opinion is the long position and the short position risk management tools. These, what I just showed you, that's probably the most important tool of all trading for trading, right? And then there's Fibonacci for like support and resistance. There's all these things, all these tools that's here for free. Head and shoulders pattern drawing tool, rectangle tool. You see me use it all the time, right? Highlighter tool. And then up here, multiple time frames, multiple ways to view the price. You have thousands, hundreds and thousands of indicators, right? That you can add on like a 1 or 2 or 3 or 4. I think it's 3. Anywhere from 1 to 3 free ones. And just do some analysis on a chart, right? Crypto, it's 24/7. So if you're on a free account, you just look at it anytime you want, right? So it's just all the tools and all the indicators, oscillators, all these indicators, it's all here on TradingView. And it really just depends on, somebody just getting in here and just trying it, Like for me, I remember a long time ago, I had no idea what anything was at all. I was so confused back then when I first started. But I'm just that person where I'm like, okay, well, let me read about it, study about it, learn about it, and then I just tried it, right? I studied a lot in practice, but at the same time, I just said, well, I remember one weekend I just opened this and I used every single tool on the S&P 500 and Bitcoin, and that's all I did for like 5 hours straight, right? It helps just knowing the tools and such. So just want to put that out there is even if you have a free account on TradingView, it's okay. You could still learn a lot and you can practice a lot and you can do a lot of great analysis on stocks and crypto using all the free tools available on TradingView. But what I do want to caution people is if anyone's using like a random strategy, that's more on the side of gambling, right? Like random buying and selling, random risk management, meaning just like all in everything, that's extremely risky. The more I learn about technical analysis, indicators, chart patterns, chart setups, risk management, the tools available, and just kind of calm down, right? Slow down a little bit, calm down, and try to find really good entry points in the market. That's with this stop loss, profit target, risk management. That's less gambling. That's more trading. That's more That's more proper investing and trading. Okay, everybody. So I just want to end here. Thank you so much for watching, joining, and donating. Really appreciate it. Again, I'm streaming live on TradingView, YouTube, Twitch, and I have a Discord group as well. So happy trading, everybody. And let's always remember especially the risk management moving forward this rest of this year. Thank you so much. Hope you have a nice week. I'll see you next time. Bye bye.